Hello, everyone, and thank you for joining us. This is the SDV COVID-19 webinar series. I'm Dave Jordan, attorney with SDV, and with me today is my colleague, Tiffany Casanova. Tiffany, if you want to say hello.
Hi, I'm Tiffany Casanova, and I'm an associate at SDV as well, and I've been an associate for a few years. That's it.
Thanks. Today's topic is property insurance policies and potential issues and chances of recovery for COVID-19 related losses. This is a unique circumstance we find ourselves in because COVID-19 is a worldwide problem and has affected a variety of industries, from the energy industry, the restaurant industry, the health and beauty industry, you name it, it's pretty much been affected by this. So facing mounting devastating losses as a result of the economic impacts of COVID-19, people naturally look to their property policies to see what potential insurance recovery they may have to offset some of these losses. And I think what a majority of policyholders have found is that they either have a virus exclusion specifically on their program or have tried to submit a claim to their insurance company only to be told, we're very sorry, we understand you're suffering, but our policy does not respond. Here's a link to sources you may look to help you recover. So today we're going to explore a little bit the exclusions in the policies, see how the courts are dealing with these exclusions, see what other potential sources of recovery there may be, and see if the legislature has chimed in.
That sounds great, Dave. So to kick this off, can you just tell us a little bit about what these exclusions look like?
The primary exclusion that's been raised by insurance companies is either a pollution contamination exclusion or a virus exclusion. The policies in the property insurance market tend to be a little bit more varying than you would see in the general liability market. So you really have to take a close look to see what your program says. But in instances where there is a specific virus exclusion, which many policies have, and which was added in 2006 in the wake of the SARS virus outbreak, those policies make it pretty much very clear that they will not respond to virus or pandemics. Other policies are a little bit more forgiving, and they have just a general pollution contamination exclusion, which is itself runs the gamut of what types of materials or substances are considered pollutants, including the term, harmful substances. So carriers with that language have also denied claims, saying that the virus is a contaminant or a pollutant. As to those programs which have the more robust virus exclusions, we think it's very, very unlikely to be able to craft an argument that doesn't apply. Conversely, however, where your policy has the more general pollution contaminant exclusion, which does not specifically reference virus, we think there is a good chance that that exclusion will not apply. In particular, because of how exclusions are construed in almost every jurisdiction in the US, exclusions are narrowly construed. It is the burden of the insurance company to prove that the exclusion applies, and any uncertainties or ambiguities are construed in favor of the policyholder. So keeping that in mind, what may actually be unfortunate for those policyholders that have an explicit virus exclusion may be helpful to those insureds that do not, because they can point to the fact that these virus exclusions were added by endorsement, which must mean that if the carriers were comfortable in their belief that the traditional pollution exclusion barred virus, they would not have added these endorsements to their policies.
So to clarify, Dave, you're saying that if you do have an explicit virus exclusion in your policy, it's not as advantageous as when you just have a pollutant exclusion, because
right.
Okay.
So if you have one of those virus exclusions that is clear and explicit, you're probably not going to be able to get coverage under your property policy, except for maybe some givebacks, which we may talk about. But if you don't have that, you can use the fact that other policies have these specific exclusions to bolster your argument that the traditional that the traditional pollution exclusion does not bar such type losses.
That makes sense, Dave. When you have a situation where you have what appears to be a pollutant exclusion that is more traditional, but does include the term virus within its definition of pollutant, would you say that that is essentially the same thing as having a separate explicit virus or communicable disease exclusion?
Unless there's some way to distinguish the current virus from the general term virus, such as if virus were otherwise defined in the policy, and there was some creative way to say that this type of virus, because it's not a bacteria, for example, doesn't apply. I would think that, you're in a tough spot if your policy does use the word virus within the contamination or pollution exclusion.
Okay. I have seen certain circumstances where insureds are currently making the argument that they didn't shut down because there was actual detection of COVID-19 on their property, but instead shut down due to a government order that, an executive order that essentially forced them to shut down. In those cases, do you think a virus exclusion, the more explicit type, would still apply?
It's a good question, and obviously that's probably an argument that will be raised in the courts. I think most people know by now that a series of lawsuits have been filed, some class actions, some individual policyholder claims challenging insurer denials for COVID-19 related losses. So it's an argument to be made that, well, the proximate cause of my injury was not virus. The proximate cause was this government order that prevented me from using my business. How that shakes out, I can't predict. Obviously, there are some question as to whether or not the virus is in fact the proximate cause, because obviously it was the impetus of the government's responding in the way they did to protect, the health and safety of the citizens of their state.
Okay, so I have a virus exclusion. Are there any exceptions or givebacks that a policy might give me?
In some policies, yes. There are either endorsements or within the body of the policy, some limited coverage for decontamination costs. So in those instances where you can argue that you had to sanitize your facility because a worker there tested positive for COVID, or that in the abundance of caution, it appears that you had customers in there that may have been carrying the virus, and you incurred the cost of sanitizing your facility, you could argue that that falls within the exception to the virus exclusion if your policy has such limited coverage. So I would recommend policyholders look for that. It's not going to be extensive. There's usually a very low sublimit for that type of coverage, or a higher deductible than would otherwise apply to other types of losses. And it may depend on what size your company is. If you're a small mom and pop shop, the cost of sanitizing your facility probably isn't going to be very much. It may not be worth even submitting. If you have a larger business, or you have a series of locations throughout and you sanitize them all, that maybe that runs up into hundreds of thousands of dollars of cleaning, and it may be something to pursue.
Okay, so those decontamination costs could be covered, like you said, in those sort of coverage givebacks, but that doesn't address the fact that an insured would no longer have business interruption coverage for having been shut down. So, is there any other source of financial assistance that could be helpful to us, maybe a statute or legislation up and coming that could be helpful to insureds?
Well, nothing that's been enacted as of yet, but there have been on the state level a number of states that have put forth legislation to provide relief to policyholders. And I think there's about 7 or so right now. And I know in particular, Louisiana, Massachusetts, New Jersey, Ohio, Pennsylvania, I believe Michigan and one other state have introduced either House bills or Senate bills to address this. And they vary somewhat across the states. I think almost all of them restrict in some way the legislation to businesses of certain sizes. So Louisiana, for example, I think it's 100 employees or less within that state. New York's a little bit broader in their proposal. I think it's 250 employees or less. And then again, how they would apply varies as well. In some jurisdictions, it will require carriers to ignore their virus exclusions and pay losses that are submitted. But the proposal is to set up some sort of fund that the insurer could then go back to and try to get reimbursed. Others are silent as to where the money is going to come from, other than to say, we're going to require carriers to pay for this. Again, none of these have passed at this point, and as you might expect, the insurance industry has been putting up stiff resistance to these measures. They feel, and I believe some of their arguments are valid, that this is a fundamental disruption of their ability to contract, especially as to those policies that have the specific virus exclusion. They promised one type of program and explicitly carved this out, didn't underwrite for it, and now they're being told to pay for it. Well, where's that money going to come from? Others have written letters talking about the devastating economic impacts that they would sustain if they were required to fund these otherwise excluded losses. So as you might expect, that any passage of these statutes will be met with legal challenge if in fact they get through the legislatures. So relief under the legislative approach would not be immediate, probably may take a considerable amount of time if it ever comes. But in my opinion, those statutes which address where the sources of funds are going to come from, so if they set up a pool of money that the insurance companies can then use to pay out the claim so that they're not out of pocket, either in the short run or the long run, would probably have a better chance of surviving than those that just simply say, this is a serious event. These people are suffering. We're going to make you pay for it, even though you didn't otherwise insure for it.
So if an insured, like you said, these are going through various legislation right now, and if an insured is incurring losses now, would this, if they do pass, would they cover their losses already experienced?
Most of these statutes have retroactive dates. Some they vary from state to state, but you're usually somewhere in the middle of March. Some are March 10th, some are March 11th, some are March 7th. But in any event, I think they date back to when that most states started locking down on businesses and preventing them from operating. So it would apply retroactively as to that extent. I should add that in addition to the states, the federal government was introducing a pandemic Recovery Insurance Act, or PREA as it's being called, similar to TRIA, the Terrorism Recovery Insurance Act. But unfortunately, that is only a go-forward proposal, meaning that it would not help those people that are suffering from the current COVID-19 pandemic, but it would only impact or only be helpful to future pandemics, or if this COVID-19 were to drop and then perhaps spike again after the legislation is passed, it may help that. It may help in that capacity.
How can an insured, if it does pass, obviously, how could an insured participate in that? Is that something that the insured buys into, or is it automatic?
I'm not, it probably depends on the policy carrier, but usually it would be added to your policy. And I believe there, in most cases, there's an additional premium. So in that sense, you would have to opt in for it. I think the way they were thinking of calculating the premium would be a certain percentage of the earned premium from the prior year of coverage that you have. And I also understand that it's optional for carriers to participate in this program, not required. But if they do participate, that the federal government would subsidize, I think, most of the payouts that are under the program. I believe maybe even 95% of it.
Okay. Outside of the virus exclusion, let's say we somehow were able to find a workaround. Are there any other exclusions or language in the policy that could be a hurdle for insureds to access their coverage?
Yes, the basis of denials usually involves two components. One is that there's an exclusion that applies, whether an explicit virus exclusion or, as we mentioned, carriers are raising the traditional pollution exclusion. And the second is the direct physical loss requirement that exists in almost all property insurance policies. And that means these policies cover loss stemming from a direct physical loss to covered property. And the argument that's raised is that you, the insured, cannot demonstrate that COVID-19 has caused any physical damage to your property, and therefore, exclusions notwithstanding, we don't cover these types of losses. The legislation that I have looked at doesn't really, except for Massachusetts, specifically say that in addition to nullifying any virus type exclusions, we are also mandating that the direct physical loss component be waived. So it's an open question that even if you were somehow to get this legislation to pass so that the exclusion doesn't apply, whether that would have fully alleviate the issue of whether or not you have actual coverage for your economic losses, unless you could demonstrate that you sustained a physical loss on the premises, and that will result in all sorts of, I think, legal questionings. What does physical loss mean? Does it have to be that I show actual deterioration of my property? Is it enough if I could show that I had COVID sprayed on my property because people were sick and they were sneezing or whatever the situation may be? Or can you say, look, I don't have use of my property because of COVID-19 and the related government shutdowns. That's a physical loss. I physically can't be there. I can't open up for business. It's not a intellectual loss. It's not a metaphysical loss. It's not some esoteric type of loss. It's a physical loss causing resulting damage. So that issue would still be out there and need to be litigated.
Yeah, I've seen numerous complaints already filed on this, where that's the argument that the insured makes, is that they physically don't have access to their building anymore, and therefore they suffered a direct physical loss. So in order to bolster those arguments, are there any other areas of law or any other guidance that they could look at to bolster that direct physical loss argument?
Yeah, there's some case law out there dealing with arguably analogous circumstances to support the argument that that COVID-19 involves direct physical loss. For example, some courts have found that buildings that had carbon monoxide fumes and cannot be accessed suffered a direct physical loss. Other sorts of noxious fumes there was one instance, I think it was a Massachusetts case, where they were laying down carpet and the adhesive let off a pungent smell, and that was considered a direct physical loss. Perhaps more analogous are other cases where pesticides were sprayed on crops that were not government approved. And so even though those crops were otherwise edible, because they were unsellable, because they didn't meet appropriate agricultural standards, they were considered a direct physical loss as a result of the application of those pesticides. Ammonia contamination of food products from refrigerants, even though they're otherwise edible if they're unpalatable, have been considered direct physical loss. There was a case out of New York, I believe, involving Pepsi Cola, where some sort of chemical got in that made the soda off tasting. And so there again, even though you could drink the soda because it didn't have a market anymore, because nobody wants to buy a bad tasting soft drink, it was considered a direct physical loss. So you could use those cases, and I believe plaintiffs' lawyers in the existing lawsuits have referred to these cases out there to support the idea that COVID-19 and a virus is physical and it's caused me a loss.
So if none of these work outside of insurance, do insureds have any solutions?
Yes and no. I mean, obviously, everybody out there is familiar with the CARES Act that helps both individuals, small businesses, and to some extent larger businesses by either providing payroll protection, giving you relief there by keeping your workers going, even though you're not making the revenue. Certain loans that are forgivable are available in other revenue sources. There's a limitation on that. I think it's widely known that people that have applied for this relief haven't gotten it because the money had dried up and the list was long, and there's certain imperfections with how that was administered. They're trying to obviously improve that, open up more funding for these programs, and to get some people relief. So that's one area or one source of recovery businesses can look to outside of their insurance. I would imagine at some point you will see other government programs that come up, whether they're state-run programs or federal-run programs. I mean, if you look at past history, when we've had moments of crises, legislation has stepped up to help address them. You've seen that in the World Trade Center, for example, where a large number of people sustain physical illness when they went to the World Trade Center site and tried to clean it up from the chemicals and the noxious dust and fumes that they were inhaling as part of that process. And so a fund was established, in the billions of dollars to help provide relief to those families, which also provided, tangential relief to those industries that responded because they employed the people that worked, and obviously they have exposure for claims that you exposed us to this condition and didn't account for our well-being. So the fact that there's this other fund out there for these people to look to protects those industries that responded. In Connecticut, there was a legislation passed which added a surcharge on people's homeowners policies to help pay the cost of a large number of homeowners that had suffered crumbling foundations because the concrete that was used to pour those foundations was faulty. Those homeowners looked to their insurance policies and were denied coverage, and the Supreme Court of Connecticut confirmed that denial, saying the language of the policy does not cover these types of losses. So the state of Connecticut, knowing that if they didn't do anything, you'd have a large segment of homeowners with no recourse, probably losing their homes and unable to pay their existing mortgages, developed this fund paid through by everybody in the state collectively that owns a home and that has homeowners insurance. So that was a sort of an effective way where you had a larger group of people come in to help these people that suffered. I think COVID-19 is a little bit more challenging because it's not designated to a specific industry or a specific area of the country, such as you would see in a natural disaster. But that doesn't mean some sort of effective programming can't be put in place or that something creative will come up. Right now we're only speculating as to what that would be. But one idea which I think may be worth exploring is an idea of some type of bond. You've seen this in World War II when bonds were being sold to help fund the military effort to combat the Nazis. Restaurants, actually, interestingly, is one industry that's been, I think, probably most significantly impacted by COVID-19. If you look around, you'll see all kinds of private charities and organizations set up to give relief to restaurants. And there is, I can't remember the name of the specific group, but they developed, in essence, a restaurant bond, which works like a discount bond. You go in, you buy, say, like a $75 bond to help fund the restaurant now, and then it takes effect, say a year from now, for like $100 worth of services or food and wine or drink from that restaurant. So gives them some upfront money that they can absorb later on when their business is restored and they have more capacity. So maybe an idea like that would be workable. Private charities, and additionally, not just in the restaurant industry, but other industries. I would, if I were a policyholder and I'm of a specific industry, I would look to see what's out there that I can perhaps apply to and get some funding for.
So is there anything that insureds or policyholders should do in anticipation of perhaps qualifying for these other types of sources? I know that it's all purely speculative at this point, but is there anything that policyholders should do to make sure that they can access these funds?
Sure. What I would recommend is that they continue to document their losses to the extent possible. Try to be as accurate in identifying the economic impact that you've suffered, or if you have any physical damage or sustained the cleanup costs and haven't gotten relief for that either. Document that and keep a record of any denials you've received from insurance companies if you've tried to submit these claims, and also make sure you hold on to those policies. Don't just rip them up when the period expires. It very well could be that whatever proposals are out there are administered through insurance companies, or that the qualification for recovery of the relief requires proof that you had insurance that otherwise would have responded but for the virus exclusion or direct physical loss issue, so that you can qualify. I mean, for example, when there was a Chinese drywall explosion of losses because the drywall was faulty, and it was mainly impacting homes and buildings in the southern states, Texas and Florida and that area. But there was some tax relief that was offered, but you had to show that you tried to get insurance and were rejected, or if you got insurance that would offset what you would qualify for. So in the same regard here, it may be a prerequisite to whatever funds are available that you tried to get coverage and you couldn't. And that way, that would keep out from people qualifying those who just did not buy any insurance and took on a risk on their own and try to absorb it. And that's just another factor that they would have to have considered on their own. And then it would also wean out those people that did get some sort of payout from not tapping those limited resources that other people could qualify for. So that's why I would make sure that you keep your policy and you keep your exclusions, your denials, if you have them.
So that's all that I have for questions for you. Are there any final takeaways or points you'd like to make?
Just to reiterate the key things that are important to consider when you're looking at business losses and property insurance. Again, what type of exclusion does your policy have? Does it only have the traditional pollution contamination exclusion? Does it have the more robust virus exclusion? Are there any givebacks under the policies? Keep an eye on the litigation that's out there, because that may be a bellwether as to how the courts are addressing these issues in terms of the traditional exclusions, and then the other issue we discussed, which is the direct physical loss component. On our website, sdvlaw.com, and I think, Tiffany, you know more about this than I do, but we are tracking the legislation, both the existing legislation and any other future legislation that may come come up. Is that right?
Yeah, on sdvlaw.com, we are tracking existing and presumably future legislation that comes into play regarding COVID-19, and we're also tracking all active cases. So any litigation that has been filed, we are doing our best to update that every day, and that should help policyholders be able to see how the courts handle these virus exclusions or the direct physical loss component that you've been discussing today.
And then obviously, I'm sure this is intuitive and most business owners probably know this already, but look out there, see what programs are currently in the works, what's on the horizon, look for articles, other ideas that may be out there. Again, this is such a devastating, wide-reaching crises that it's hard to imagine that there's going to be no solutions out there to try to keep these vital businesses and industries, which everybody relies on, going. I mean, imagine a society where we don't have restaurants or health and beauty services or cleaning services or barbers or anything else. I mean, it's just hard to imagine. So you got to just keep hope, and I got to think that in addition to the CARES Act and other legislation that may be on the horizon, that there's going to be other programs instituted. That's about it. I want to thank everybody for listening. Again, this is part 6 of the SDV COVID-19 webinar series. Stay tuned for part 7, which will be coming out, I believe, in another week or two. And if you've missed any of these series and you'd like to catch up on them, you can access them on our website, sdvlaw.com. We have a webinar link that you can check out. And we also have other resources. As Tiffany mentioned, we have a legislative tracker, a case tracker, and other COVID-19 literature that you can peruse at your convenience. Thank you.